Hi everybody, hello everyone. I hope you all guys are doing good. You're all doing great, right? So what is the purpose of coming before you through this video is, see, recently Institute has released a booklet. Recently Institute has released one booklet which contains some MCQs. See, recently in the recent past, so almost all some up to some 30 marks, the questions are getting asked from MCQs. They are asking in the pattern of MCQs. So the institute has released one booklet through which they have provided you some guidance. They have given some normal MCQs and also they have explained you some. They have given some case study based MCQs. So how the case study can be asked. So keeping that in mind, they have given a few examples in that booklet. So through this video, we want you to explain these case study based MCQs which are given in this booklet. What is the purpose of coming before you through this video? We want you to explain, we want you to take you through the case study based MCQs which have been released by the institute in this booklet. So if you observe this booklet, so in total, if you see here, yeah. So in total, it has 160 normal MCQs. It includes normal 160 multiple choice questions and includes 40 case scenarios, right? So we will not be going through the general MCQs which they have given. So like this, for example, they have given normal MCQs. That normal MCQs we are not going to go through. So what we are doing is through this video, we are going you to explain only the case study based MCQs. So normal MCQs that you can go through on your own, but there are a few case study based MCQs which we thought that we will take you through. Okay, right. So with that intention we are doing these videos. We hope these videos are going to help you a lot in your exams. So without any delay, let us start discussing with case scenario number 1. And as you can observe, this material is, they have given in the preface that this material is going to be applicable from, this booklet is relevant for May 2021 examination and onwards. So those who are appearing for May 2021 and after that exams, whoever are appearing, this booklet is relevant to them. Okay, right. So without any delay, let us go to the MCQ based questions. See, and one more thing before starting actually going into this explaining part. So I would like you to bring to your notice a few answers are wrong here. So whatever answers which are given by the board for some of the questions, so we found out that some of the answers are wrong. Okay, right. So we will also explain that wherever the answers are wrong. So most of them are okay, but here and there 1 or 2 MCQs the answers are given in a wrong manner. So you please be careful regarding that. We don't agree with the institute regarding those answers. Right. So let us start. Case scenario 1. Messrs. JJ and Associates, having office in Chennai, are statutory auditors under Companies Act 2013 of a company, Sweet Aroma Private Limited, engaged in the business of obtaining and manufacturing rice from paddy, catering to both domestic as well as international market, mainly in Gulf nations. So what they're telling, there is a firm JJ and Associates. What is the name of the firm? There's a firm called JJ and Associates. This firm has been appointed as auditor of Sweet Aroma Private Limited, and this Sweet Aroma Private Limited is engaged in the business of obtaining and manufacturing rice from paddy. So what is the business in which this Sweet Aroma Private Company was engaged? So it was engaged in procuring paddy and from that manufacturing rice, and they are selling it in both domestic as well as international markets. Then the company has a huge plant capacity for rice extraction in one of the states in northern India. So what they are telling, the company is having huge plant capacity in northern India. Needless to state that inventories are in huge quantity in such type of business consisting of raw material, work in progress and finished goods. So automatically it is a manufacturing sector, inventory is going to be very large, right? And inventory contains both all raw material, work in progress and also finished goods. The auditors want to obtain sufficient appropriate audit evidence regarding inventories. So the auditors of this company JJ and Associates, they want to obtain sufficient appropriate audit evidence regarding inventories. So what standard deals about this inventories? What standards deals about audit evidence regarding inventories? So if you remember carefully, there is SA 501, special considerations for specific items. Like I say, 501 explain you about what are the special considerations that you have to keep in mind when you are obtaining evidence regarding inventory, litigations and claims, and segment reporting, right? So from that standards, they are going to ask a few questions. Let us read and understand and try to find out the answers. In above context, answer the following questions. Which of the following is most likely correct in relation to obtaining sufficient appropriate audit evidence regarding existence and condition of inventory? So what they are telling, they have given some 4 options. In the 4 option, which one is more likely correct? Out of the 4 option, which one is the more likely correct? We have to choose that option. First of all, let us read A option. It is mandatory for the auditor to attend physical inventory counting on the date of financial statements in all circumstances. So is it mandatory? No. See, generally SA 501 says that try to attend whenever the management is counting inventory on the balance sheet date. So sometimes it may not be possible for you to attend, then standard is telling alternative procedures also. Yes or no? So what does the standard say? Try to if the inventory counting is being carried out a balance sheet date, try to attend. If the inventory is counting is carried at a date other than the balance sheet date, then also try to attend. If you are not able to attend at the date when the management is physical and at the time when the management is physically counting the inventory, then you go on some other day and do the test counts. Yes or no? So that is what standard says. It doesn't say it is mandatory for the auditor to attend a physical inventory counting on the date of financial statements in all aspects. So this statement is false. Next, physical inventory counting may be attended by the auditor on the date of financial statements or at a date other than date of financial statements in his discretion, mandatorily in all circumstances. Here what they are telling, here also auditor should attend either on the balance if they are conducting physical counting on the financial statements date or at any other date whenever the management is counting financial statement. Whenever see what they are telling, physical inventory counting may be attended by the auditor on the date of financial statements or at a date other than the date of financial statements in his discretion, mandatorily in all circumstances. Here also they are telling mandatorily you have to attend. Need not. The standard is just telling try to attend. That's all. It is not putting any mandatory requirement on you. So this option is also wrong. It is not mandatory. Then the attendance of auditors at physical inventory counting is impracticable due to time and cost involved because of auditor's office location vis-a-vis company's plant location. See, auditor is telling I will not be able to attend physical inventory counting, or he is telling attending to physical inventory counting process is highly impossible, impracticable. Why? Because client's office is at a distant place from my office. What auditor is telling? So attending physical inventory counting is impracticable. It is not practicable to attend a physical inventory counting process. Why? Because client office is located at a very distant place from the auditor's office. Can it be used as an excuse? Is it a valid basis for impracticability? Can you say client office is located at a distant place, so that's why it is impracticable for me to go there? No, it is not the reason for impracticability. See, if you have some natural disasters, if you have some other major catastrophes like that, those are the cases which come under impracticability. Just the distance is far away, you cannot say that as a reason for impracticability. And hence they are telling what? Hence, attendance at physical inventory counting may be skipped and alternative audit procedures may be performed to obtain sufficient appropriate audit evidence. Definitely not. You cannot say that the distance is far away, that is the reason for impracticability. You cannot say that. Okay, so even option C is also wrong. Let us read option D. The auditor shall attend at physical inventory counting unless impracticable. See, unless impracticable, you should always try to attend physical inventory counting. However, issue of time and cost involved because of auditor's office location vis-a-vis company's plant location is not a valid basis for skipping physical inventory counting. This is the correct statement. So what they are telling, see, unless impracticable, it is not mandatory. If it is impracticable, you can skip. Unless impracticable, you shall attend the physical inventory counting. However, you cannot use a time and cost as a reason for skipping inventory. You cannot say my client's office is located at a distant place, I am going to incur lot of time, I am going to incur lot of cost, that's why I consider this reason as impracticability and that's why I am skipping inventory counting. Can you say that? You cannot say that. That is what this statement is telling. However, issue of time and cost involved because of auditor's office location vis-a-vis company's plant location is not a valid basis. It is not a valid basis for skipping physical inventory counting. This D option is the correct option. Okay, right. Then second MCQ. Below are certain cluster of matters which are relevant in planning attendance of auditor at physical inventory counting. Which of the following clusters consists of likely inappropriate combination? So they are giving some cluster, some group of items which are related to physical inventory counting. So whenever you attend physical inventory counting, you are required to consider some matters, no? So some group of matters they are giving in each option. Which of the following cluster consists of likely inappropriate combination? See, one of the option, each option contains some combination. One of the option contains some inappropriate combination, some wrong combination is there. That means in one of the option there is some matter which is not relevant for auditors attending the physical inventory counting process. What is that matter out of this option? In which of the option that matter which is not relevant for auditor at the time of physical inventory counting? That's what we have to find out. So let us see. A option, nature of inventory. See, when you attend that inventory counting process, definitely you are going to consider what is the nature of inventory you are having. Is it raw material? Is it work in progress? Is it finished goods? That nature of inventory definitely you will consider. Timing of physical inventory counting, at what time you have to consider physical inventory counting? Is it on a balance sheet date? Other than balance sheet date, definitely you will consider that matter also. And stages of completion of work in progress. Yes, you will also try to observe what stage of work in progress has been completed. 50%, 60%, 70%, 20%. What is the percentage of work in progress completion? That also you will observe. Then B option. So A contains all appropriate options only. A contains all, A combination is appropriate. Next one. Nature of inventory anyway we have seen. Timing of physical inventory counting and valuation method of inventory. So if you observe here, valuation method of inventory, it is not related to inventory counting. See, what we are concerned with inventory counting, when you attend the physical inventory counting, what is the thing that you observe there? You will see what is the nature, how much quantity is there. That is what you are going to see. Valuation is something which you will do after you have counted inventory. For example, I have seen physical verification process. As an auditor, I have attended the client's premises for physical inventory counting. At the time, I have observed that there is a 1 lakh quantity of stock. So, okay, I am satisfied. So, after your physical inventory counting, then the valuation matter comes into existence. Valuation will not be a matter which you will consider at the time of attending physical counting. When you are attending for physical counting, your main focus will be on what is the nature of inventory, what should be the time I have to go for audit, what is the quantity, what are the internal controls. You will concentrate on that. You will not concentrate on valuation method. So valuation method you are going to observe after completion of inventory counting process. So this valuation method of inventory is not something which is a matter which the auditor will consider at the time of physical inventory counting. Okay, so B is an inappropriate combination. B is a inappropriate combination. So C and D also let us read. So answer, I think B is a correct answer. Let us see option C and D also. C option, nature of inventory we will consider. Timing of physical inventory counting, this also we consider. Considerations regarding maintenance of perpetual inventory system, that also I will observe. That means how you are maintaining inventory records, whether you are following perpetual inventory system, periodic inventory system, whether the inventory records are updated on time or not. That is also part of your physical inventory counting only. When you go for physical inventory counting, definitely you are going to observe whether inventory records are updated on real-time basis or not. That also you are definitely going to observe. Then D point, risk of material misstatement related to inventory. Definitely when I go for physical inventory counting, I will observe what is the risk of material misstatement happening in the inventory. For example, I visited a godown. I went for physical verification. I went to the godown where the stock and all is kept. When I observe, there is no CCTV camera in that. When I observe at the gate, at the entry or exit gate, there are no security guards. So definitely I will pay attention to this matter when I attend physical inventory counting, whether appropriate internal controls are there. Is there any risk of material misstatement happening? Definitely this is a matter which is relevant for me. When I go for physical inventory counting, I have to consider that. Then nature of internal controls pertaining to inventory. Definitely I will observe what internal controls are there. As I have said, is there a CCTV camera or not? Is there a security guard or not? That also I will consider whenever I go for physical inventory verification. Then consideration regarding maintenance of perpetual inventory system, and also I will consider, so definitely this this the last point which we have already covered in the C point. So I will also keep in mind whether I will also keep in mind what are the how the records are being maintained, perpetual inventory system, how they are maintained, that also I am going to observe. So A, B, C, all the three are appropriate combinations only. A, C, D, all the three are appropriate combinations only. So here what is the correct option? What is the inappropriate combination? B. B is the correct option. Then next, which of the following is most likely logical sequence of steps in relation to attendance at physical inventory counting by auditor? See, that means whenever you attend for physical inventory counting, you have to do some steps. That steps follow some logical order. What is the correct logical order? There will be 4 steps involved. So in all these 4 options, different orders were given. Different orders were given. Which one is the correct logical sequence that we have to identify? All the 4 options contain same points, but order will be different. So let us read first one, what and all points that they are giving. First one, observance of performance management, observance of performance of management's counts procedures, inspection of inventory, this is the first point, inspection of inventory, second point, performing test counts and evaluation of management's procedures, third point, fourth point what they are telling is, and last point, evaluation of management's procedure for recording and controlling results of analytical procedures. So 4 steps they are telling. So let us rename it. A, B, C, D we will give, so that we will mention the correct order 1, 2, 3, 4. Okay, so A, B, C, D. So A, performance, observance of performance of management's count. B, inspection of inventory. C, performing test counts. D, evaluation of management's procedure for recording and controlling of physical inventory counting. Right. So what is the correct logical sequence? See, if you go through SA 501 standard, if you open our material in SA 501 standard, if you open, the first point will be there. Matters when you attend the physical inventory counting, what and all you will observe in our standards on auditing, 4 points will be there. Those 4 points are this only. And there we have given a correct sequence also. If you open the SA 501 standards on auditing material, there you will be able to find the first paragraph, what and all you will do when you attend physical inventory counting. 4 points we have given. There we have given correct sequence. If you go and observe there, what will be the first point? First you have to, when you go for physical inventory counting, first you have to observe, first you have to evaluate. That means you have to analyze what are the management's procedure for recording and controlling results of physical inventory counting. That means first you should go and analyze what are the management's plans for verifying this inventory, how they are going to do this inventory counting, what procedures they have designed, what policies they are following. First I should evaluate that. First I should analyze that. So first step is you have to evaluate management's procedure for recording and controlling results of physical inventory counting. In order to do the physical inventory counting, what procedures management has designed to follow, first I will analyze that. So first step is D point, evaluation of management's procedure. Then what is the sequence? Then what I will do is I will observe. First I will try to understand what management is doing. Then I will observe whether they are doing correctly or not. Okay, so observance of performance of management's counts procedure. First I will understand, first I will analyze what they have planned, then I will observe whether they are doing it correctly or not, then I observe. And third one, I inspect inventory. Third one, what I will do, I will inspect the inventory. Right, I will here and there I will go and check the quality, whether at the time of observance only I will go and inspect the inventory, whether the inventory is good quality, bad quality, is it deteriorated, is it superior quality or inferior quality, that I will inspect. And finally I will also do some test counts. I will also do what? Test counts. First I will inspect, then whether the management is counting correctly or not, for the control purposes I will do some test counts on my own. I will go to some stock and I will try to count on my own, not all the items, a few test counts I am going to do. Right. So what is the correct logical sequence? Correct logical sequence should be, first you have to evaluate management's procedure for recording and controlling results of physical inventory counting. Then you have to observe the management counts. Then you have to inspect the inventory. Then finally you have to perform the test counts. So this is the correct logical sequence. So in SA 501 there is clearly given, we have clearly given in the first paragraph. Okay, so where it is there, correct logical sequence, in D option the correct logical sequence is there. So evaluation of management's procedures for recording and controlling results of physical inventory counting, observance of performance of management's count procedures, inspection of inventory and performing test counts. Then 1.4 next MCQ. During attendance at physical inventory counting, the auditor inspects inventory. Definitely, when you go for physical inventory counting, what auditor is going to do? He will inspect the inventory. Following outcomes stated as 1, 2 and 3 are given below of this inspection procedure. So some outcomes they are giving. What are they? Outcome 1, existence of inventory, whether the inventory is there or not. Ownership, whether inventory belongs to the client or not. And outcome 3, what is the condition of the inventory? That means, is it a normal quality, is it deteriorated, is it has it become inferior, has it damaged? That is the condition of inventory. 3 outcomes they are giving. Which of the following statements is most likely true? So now let me ask you a simple question. If you go and physically verify the inventory, if you go and do physical inventory counting, what outcome you will achieve? Will you know about existence of inventory? Definitely yes. Will you know about existence of inventory? Definitely yes. See, the basic purpose of doing physical inventory counting is to know whether inventory is in existence or not. That is the basic purpose. Why you go and do physical inventory counting? The basic purpose is you want to know whether the inventory is there actually in existence or not. Definitely existence outcome you will know. Let us come to the outcome 3, condition of inventory. Is the inventory condition is good, bad, is it damaged or is it of superior quality? That also you will come to know, right? When you go and count physical inventory counting, you will see, by observing you will know whether this inventory counting is of proper quality or not. Is it in a good condition, is it in a bad condition? Definitely you will come to know. So outcome 1, existence, and outcome 3, condition, definitely you will know once you perform physical inventory counting. But ownership of inventory, see this, whether there is some 1 lakh units of stock. As per management inventory records, the closing stock is 1 lakh units. When I go and observe the go down also, there are 1 lakh units, but out of this 1 lakh units, 10,000 stock doesn't belong to me. Out of this 1 lakh units, 10,000 stock doesn't belong to me. This I have received on job work basis which belong to some other person. Now, unless the management lets me know, or unless they have kept it separately unless they have been kept separately somewhere and a clear mentioning has been given, job work stock, like that, unless it has been kept separately, unless a clear indication was there in the go down, I will not come to know whether this 10,000 stock belongs to my client or is it belonging to a third party. I will not come to know. When I will come to know, if there is a clear indication or management lets me know, sir, this stock is not belonging to us, this stock is belonging to some third party, but they are lying with me. Able to understand? So ownership of inventory, I may know, I may not know. When I may know, when there is a clear indication. For example, whatever stock which doesn't belong to me, they have clearly kept in a separate room. In the on the door, a sticker was attached. So goods which are received on job work. Now I will come to know, okay, I will come to know whatever stock which is there in this go down, that doesn't belong to the, whatever stock that is there in this room, that doesn't belong to the client, that belongs to some third party, but they are lying with us. So it should not be, the client is not the owner. That I will come to know if there is a clear indication. If there is no clear indication, if it is mixed with the regular stock, I will not come to know whether that stock is the property of the client or some other party. I don't know. Okay, so that's why existence condition definitely we will know, but ownership of inventory we may or may not know, right? So now let us see what are the options. Which of the following statements is most likely true? Outcome 1, outcome 2 and outcome 3 are all necessarily established after inspection. Is it so? Definitely. Can you say I will know about existence, ownership and condition? Definitely I will know. Can you say that? No, sometimes it may not be possible. Then outcomes 1 and 3 are established after inspection and outcome 2 is never established. See, we cannot say ownership you will never come to know. Sometimes you may get to know. When I say there is a clear indication, when they are clearly identified. So sometimes you may get to know. Completely you cannot say ownership at any cost you will not know. You cannot say that. Sometimes you may get to know, right? Option B is also wrong. Outcome 2 and 3 are established after inspection. However, outcome 2 may not be necessarily established. This is the correct option. Outcome 1 and 2 definitely you will know, but outcome 2 sometimes it may not be necessarily established. Then Outcome 2 and 3 are established. That means you will definitely know ownership and condition, but existence you may not know, which is completely wrong. Right? Existence and condition definitely you will know, 100% you will know, but ownership may or may not be established. Okay, so C is the correct option. Then 1.5. It was observed by auditors that out of the total rice physically counted on 31st of March 2020, about 67 quintals of rice belong to Mrs. PQR, a proprietary concern who has sent paddy to this company's plant for extraction of rice. So what they are telling, out of the total closing stock you are having, some 67 quintals of rice doesn't belong to you. Our company Sweet Aroma Private Limited, in this stock there are some 67 quintals of rice is there. That doesn't belong to Sweet Aroma, that belongs to some other proprietary concern, PQR and Co. But why they are lying with you? Why? Because this proprietary concern PQR and Co, they have sent the rice to you, they have sent paddy to you, out of that you have extracted the rice. PQR and Co, they have sent paddy, out of that you have extracted the rice and you have to send it back to PQR. But as on the balance sheet, that is still lying with you. Now what they are telling, so is for this 67 quintals, who is the owner? PQR and Co proprietary concern or Sweet Aroma? PQR proprietary concern. Why? Because it is a stock which has received on job work basis. After work is completed, that stock should be returned back to the whom it should be returned back, to that proprietary concern it should be returned back. So owner is PQR and Co, but they are in the possession of Sweet Aroma for job work, your client. Now what should happen? What would be treatment of these items in the financial statements? What you should do? Should this 67 quintals of stock which is lying in the possession of Sweet Aroma Private Limited, should it be included in the closing stock of Sweet Aroma? Definitely not. Should it be included in the closing stock of Aroma? No, they are not the owner. In whose books it has to be recorded? In that will form part of inventory of PQR and Co, that will not form part of Sweet Aroma, because they are not the owner, just the stock is lying with them, some third party is the owner. Okay, so if we read the options, the value of 67 quintals rice would be reflected in the company's financial statements. Here itself his answer is wrong. It will not be included in the company's financial statements because it is not the owner. As per the method of valuation adopted by the company, definitely not. This stock will not be included in the company's financial statements. A option is wrong. Then B option, the value of 67 quintals rice would be reflected in the company's financial statements as per the method of valuation adopted by proprietary concern. Here also wrong only. So whenever you read it till here, the value of 67 quintals of rice would be reflected in the company financial statements, which is completely wrong. It will not form part of your company's financial statements. It will form part of the proprietary concern. This option is also wrong. C option, the value of 67 quintals rice would not be reflected in the company's financial statements. This is correct. The value of 67 quintals of rice, they will not form part of your company's financial statements. 100% this option is correct. Then D option, the value of 67 quintals rice would be reflected in the proprietary concern. This is also correct. This is also correct. See, listen carefully. The value of 67 quintals rice would be reflected in proprietary concerns financial statements. Yes, it will be reflected in the proprietary concerns financial statements as per the method of valuation adopted by the company. This is wrong. That is wrong. That statement is wrong. So if you just say the value of 67 quintals of rice, it would be included in the proprietary concerns financial statements, it is good. But they would be, according to what method proprietary concern will value them? According to the method which proprietary concern is following. Why they will take into account company's valuation method? Yes or no? So if they just tell you the value of 67 quintals would be reflected in the financial statements of proprietary concerns financial statements, yes, as per the valuation method, as per the valuation adopted by proprietary concern, then also correct. But what they have done here mistake is as per the valuation adopted by the company. No, you are including the stock in the proprietary concerns books of accounts. You have to see what valuation method is adopted by the proprietary concern, not the company. Okay, so D option is also wrong. Correct option is what? C. So on the first MCQ we have completed all the 5 answers. What are the answers that we have recorded? So let us cross check with the answers given by the institute. So 1.1 D. So 1.1 they are telling the answer is D. What we have answered? Yes, 1.1 D. Then 1.2 nature of inventory, 1.2 B, 1.3 D. So let us see. 1.2 they are telling the answer is 1.3D. So anyway, that is correct. 1.2, yes, B is correct. 1.3, D is also correct. 1.4 we have answered C. 1.5 we have answered C. So 4 and 5, C, yes. So first option, first MCQ correct. Now let us discuss case scenario number 2, what they are trying to tell you here. A partnership firm of chartered accountants, YZ and Associates, were appointed as auditors of UV Private Limited. So what they are telling, audit firm is there. What is the name of audit firm? YZ and Associates. They are appointed as auditors of which company? They are appointed as auditors of UV Private Limited. Very good. Then the financial year for which YZ and Associates were to audit books of accounts of UV Private Limited began on 1st April 2018 and ended on 31st of March 2019. Very simple. They are just telling you they are appointed for which financial year. So what they are telling, they have to verify books of accounts which are starting from 1st April 2018 to 31st of March 2019. That means they are simply telling that this YZ and Associates were appointed as auditors of UV Private Limited for the financial year 2018-19. Okay, very good. Then YZ and Associates consisted of 4 partners, namely Mr. Y, Mr. Z, Mr. G and Mr. H. This firm is having 4 partners. Who are they? Y, Z, G and H. Nice. Then what they are telling, while auditing books of accounts of UV Private Limited for the period beginning on 1st April 2018 and ending on 31st of March 2019, one of the partners of YZ and Associates, namely Mr. H, took up the expenses part for the purpose of audit. So they are having 4 auditors, no? They are having 4 partners, no? This person, Mr. H, he has taken up expenses part for the purpose of verifying. Then what happened? The management of UV Private Limited has adopted various accounting principles and policies related to expenses which Mr. H, as auditor of UV Private Limited, was unable to understand. So this UV Private Limited has followed, the management of this UV Private Limited has followed different accounting policies and principles related to expenses which auditor is having some accounting policies auditor is not able to understand. Then some of the issues which Mr. H was unable to understand are as follows. So they are telling you some of the issues which Mr. H was unable to understand. As an auditor, he was not able to understand some. What are the things which he is not able to understand that they are explaining? What are they? Power and fuel expenses paid for the month of April 2019. See, they are appointed as auditors for the year 18-19. So year ends on what date? 31st of March 2019. So keep this in the back of your mind. Now let us see what they are telling. Power and fuel expenses paid for the month of April 2019 and May 2019 have been included and shown as power and fuel expenses for the period beginning 1st April 2018 and ending on 31st of March 2019. So what they are telling, they have paid April 2019, next year, May 2019. See, these are 2 months electricity expenses, power and fuel expenses they have paid in advance and they are showing them as power and fuel expenses for the year 18-19. Is it correct? Definitely not. Why? Because this April 19 and May 19 expenses which they have already paid, they relate to the next year. So how they have to be shown? They have to be shown as what? They have to be shown as a prepaid expenses. They should not be shown as current year expenses. They should be shown as a part of what? Prepaid expenses. From the prepaid expenses, next year they have to transfer to expenses. First point. Then next. Personal rent expenses of the son of one of the directors, Mr. T of UV Private Limited, have been shown as rent expenses of business of UV Private Limited. So we will do one thing, instead of reading each and every point, each point is related regarding one point, one question is there. So let us complete the point and relevant question. So 2.1, answer the following question. As per the point number 1, that is regarding power and fuel expenses, just now we have discussed, mentioned in the above case. The power and fuel expenses paid for the month of April 2019 and May 2019 must be shown under asset side of the balance sheet. That we know. So the expense which you have paid in advance, that has to be shown as an asset on the balance sheet side. Okay, as on 31st March 2019. Yes. Now what are the options they are giving? How they have to be shown? Are they required to be shown as outstanding power and fuel expenses? Definitely not. They are what? Prepaid. So this is wrong. They have to be shown as prepaid power and fuel expenses. Yes, you have prepaid, right? You have to show at prepaid power and fuel expenses as an asset. Very good. B option is correct. Will you show directly as power and fuel expenses? No. Will you show it as power and fuel expenses payable? No, it is already been prepaid. So which option is correct? B option is correct. Then, now read the second point. Personal rent expenses of son of one of the directors, Mr. T of UV Private Limited, has been shown as rent expenses of business of UV Private Limited. So this company, UV Private Limited company, is having so many directors. So one of the directors' son is staying in some flat and is having some rental expenses. Now the company is showing this rental expenses of son of the director as business expenses of the company. Can they show it? No, they cannot show it. So let us see that also. 2.2. As per point number 2 mentioned above in the case, the personal rent expenses of the son of one of the directors, Mr. T, were added to the rent expenses of business of UV Private Limited. So expenses, the rent which is paid by son of the director has been shown as a rental expenses of the company. Now what you have to do? The amount of personal rent expenses of the son of the director, Mr. T should be. So what should be the correct treatment? What now you should do? They have already included it in the rental expenses of the business. Now what they have to do? You have to deduct them from the rental expenses. Okay, let us see the options. A. Subtracted from rental expenses of business of UV Private Limited. Definitely yes. You have to subtract it from they have already been added to rental expenses. Now subtract them. Correct option. Then they remain added to the rent expenses of business of UV Private Limited. That means you are not required to do anything. It should be added to the business expenses. Is it correct? Is it a correct explanation? No. Then again added to rental expenses. Is it correct option? See, you have already added, which is a wrong. Once again, why you have to add? So this B option, C option is also wrong. Then D option. Subtracted twice from rent expenses of business of UV Private Limited. Not required. You have added it once, now deduct it. That's all. You are not required to subtract it twice. You just subtract it once, more than enough. So A option is the correct option. Then let us read the third point. Point number 3. Repair and maintenance expenses for the month of February 2019 and March 2019 were still outstanding and were not shown in the balance sheet of UV Private Limited. So what they are telling, there are some repairs and maintenance expenses you have not paid for the month of February 2019 and March 2019. If you have not paid, how they have to be shown? They have to be shown as a liability, right? Outstanding expenses payable. Yes or no? Right? So now let us read the relevant question 2.3. As per point number 3 mentioned above in the case, the repair and maintenance expenses outstanding for the month of February 2019 and March 2019 must be shown under liability side of the balance sheet. Yes, as on 31st of March. As what? Will you show it as a prepaid repairs and maintenance expenses? No. Will you show it as just repair and maintenance expenses? No. Will you show it as repair and maintenance expenses paid in advance? You have not yet paid, you are still required to pay. So this is also not correct. Now D option, repairs and maintenance expenses payable. This is the correct option. You have not yet paid, you are required to pay. So what you will do, you will create a provision and show it as a liability. Repairs and maintenance expenses payable. As simple as that. So D option is the correct option. Then 2.4. Sorry, let us read the fourth point. Repair and maintenance expenses for the financial year 1st April 2018 to 31st of March 2019 were very high as compared to financial year 1st April 2017 to 31st of March 2018. So repairs and maintenance expenses for the year 18-19 are very high when compared to 17-18 repairs and maintenance. For example, 17-18 repairs and maintenance expenses are just 10 lakh, but 18-19 repairs and maintenance expenses are 1 crore, very much higher. Then the auditor, Mr. H, asked the appropriate authority about the reasons for such huge differences in amounts of 2 financial years. Now this person, auditor Mr. H, he is asking some appropriate authority some appropriate authority in the organization. What is the reason for such huge differences in repairs and maintenance for the last year and current year? That reasons he is asking to some appropriate authority. Now, what is the question related to this fourth point? Let us read. 2.4. As per point number 4 mentioned in the case above, the auditor Mr. H asked the appropriate authority for reasons of huge differences in the amounts of 2 financial years of repair and maintenance expenses. By appropriate authority, Mr. H was referring to. See, you are telling to appropriate authority, he will question what are the reasons for the differences. Now, who is the appropriate authority? Who is the appropriate authority here? When you say auditor is communicating to appropriate authority, what do you mean by appropriate authority? So let us see the options. All employees of UV Private Limited? No. See, generally when we say appropriate authority, it means management of UV Private Limited, not employees, not members, not directors, not general directors. When I say appropriate authority means we are referring to management. See, whenever we want some explanation, whom we will ask? We will go and ask management only, no? So appropriate authority in the sense here, management. So here appropriate authority, will it refer to employees? No. Will it refer to management? Yes. Will it refer to members? No. Will it refer to any one director? No. So when you say appropriate authority, that means you are referring to entire management of the company. So B option is a correct option. Now let us read the fifth point, sorry. While verifying the insurance expenses, the insurance policies were not shown to auditor Mr. H. See, you are verifying insurance expenses, but at the time of verifying the insurance expenses, they have not shown you insurance policies. See, if you have insurance policies, that will be sufficient and appropriate audit evidence. See, the company has paid so and so amount of insurance premium. Whether the insurance premium that they are showing in the books of accounts, is it correct or not? How you can come to know? If the insurance policy will be if the insurance policy is there, that will give you a better quality of evidence. That will give you appropriate evidence whether genuinely has the company paid insurance expenses or not. That a better evidence you will have when you verify insurance policies, when insurance policies are available. Now, what is the question there? But they are not providing you insurance policies. Now, let us see what is the question they are asking relating to this point number 5. Right. So, 2.5. As per point number 5 mentioned in the above case, in verifying insurance expenses, the insurance policies would provide auditor Mr. H as. That means when you are verifying insurance policies, when you are verifying insurance expenses, if you have insurance policies, that would provide auditor with what? That would provide auditor with valid supporting. You are see, please understand the question here. So in verifying insurance expenses, while you are verifying insurance expenses, if you have insurance policies, that would provide auditor with what? That would, if you have insurance policies while verifying insurance expenses, that would provide auditor with valid supporting. That would provide auditor with sufficient and appropriate audit evidence. That is what they are telling you here. They will provide the auditor with valid supporting. So if you, in verifying insurance expenses, the insurance policies would provide auditor Mr. H as invalid supporting. No. Insurance policies are valid supporting. Will it constitute not supporting? No. Will it constitute lack of supporting? No. It constitutes valid supporting. When you have insurance policies for the purpose of verification of insurance expenses, that would be a valid supporting. Okay. So with this we completed case study based scenario number 2 also. Let us verify the answers. First 2.1b, 2.2a. Let us see whether they are correct or not. B and A. What we have answered? 2.1b, yes, correct option. 2.2a. 2.3d, D, B, D. Let us see. Yeah, D, B, D. Yes, our answers are also matching with the institute answers. Good. So we have completed 2 case studies. Now let us read case scenario number 3. Mr. Lakshman is appointed as statutory auditor of BIST Limited for the financial year ended 31st of March 2020. So there is a person, Mr. X, a practicing chartered accountant. He has been appointed as statutory auditor of some BIST Limited for which year? For the year 1920. Then what happened? During the course of audit, it was found that few doubtful transactions had been committed by finance manager. So during the course of audit, it was found that there are few doubtful transactions which has been committed by finance manager who retired in March 2020. So there was some finance manager who retired in the month of March. He found that there are few doubtful transactions which are committed by this finance manager. So what are they? The fraud was going on since last 4 or 5 years and the total amount misappropriated is approximately 75 lakhs. So this finance manager, so there was some fraud going on from the last 4 or 5 years and the total amount that has been misappropriated in this fraud is some 75 lakhs amount was misappropriated. Then balance sheet of Best Limited reflected a cash balance of 7 crores, huge amount of cash. See, generally companies will not generally maintain huge amounts of cash in hand. But this company is maintaining 7 crores amount of cash in hand as on the balance sheet date, which is very much doubtful. Then the company has taken a loan of rupees 2 crores from the bank despite of huge cash balance with the company. See, if you have that much of cash balance, why you required to go for loan? See, if you are having that much of cash balance means you are having enough of reserves, right? But when I observe the balance sheet, they are having cash balance of 7 crore rupees. In addition to that, they have even taken a loan of 2 crores from the bank, even though they are having 7 crores of cash. Now it sounds something fishy to me. So there are cash reserves of 7 crores. If there are requirement of funds, they can use this 7 crores. No, why they are going to the bank for loan for 2 crores? There could be something wrong. Might be this 7 crores cash balance may not be a real balance. They are inflating. Then what happened? Also, Companies Act imposes some duties on auditors to report matters to central government in case of fraud. So we have clearly seen under 143 subsection 12 in Companies Act, we have seen clearly under 143 subsection 12, this 143 subsection 12 is imposing some responsibilities on the auditor whenever you identify some fraud in the organization. So if the amount of the fraud involved is 1 crore or more, then you are required to report to central government. If it is less than a crore, you are not required to report to central government. This all we have seen in the company audit chapter. Then on the basis of above facts, answer below questions in relation to Mr. Lakshman's role and duties while conducting statutory audit of Best Limited. So on the basis of the above facts which they have given, they are asking you to explain what and all will be the duties of this person, Mr. Lakshman, while acting as a statutory auditor. So if we summarize the facts of the case, so what and all they are telling, so there is a company Best Limited. For that company, Mr. Lakshman has been appointed as statutory auditor. So a finance manager retired during the company. So there was a fraud involved which is happening from last 4 or 5 years and the amount involved is how much? 75 lakhs. In addition to that, company is having a cash balance of 7 crores. Instead of that also they have taken a loan of 2 crores. Right? And also they are telling there are some responsibilities of auditor under Companies Act regarding fraud reporting. So on these facts they are asking you some questions. Let us try to answer. Mr. Lakshman shall obtain dash that Mr. Lakshman shall obtain blank that the financial statements are free from material misstatements. What are the options? Let us see. A. Absolute assurance, reasonable assurance, management's assurance, CFO's assurance. See, we only know 2 assurance. One is absolute, one is reasonable. These 2 assurance we have not heard. This management assurance, CFO assurance, have you heard anywhere? So to my knowledge, I have not seen these 2 words across my standards on auditing. So these 2 options are completely out of the scope. So remove that. Next, we know about absolute assurance, reasonable assurance. What assurance we can expect the auditor to obtain? You only tell me. This we have seen even in the nature, objective and scope of audit chapter only. Audit, we can expect auditor to obtain what kind of assurance? We can expect auditor to obtain only reasonable assurance but not absolute assurance. Yes or no? So what assurance auditor can obtain? Mr. Lakshman as an auditor, what assurance he can obtain? He can obtain only reasonable assurance but not absolute assurance. So for 3.1, correct answer is B. Then Mr. Lakshman suspects that cash payments were inflated. He is thinking that whatever cash payments which are shown by the organization, they are inflated. Inflated means what? Shown higher than actual. They are showing higher cash payments than actual. Okay, inflated. Out of the below, which could be probable reason for such inflated cash payments? They have given a few options. Out of the below options, which technique will be appropriate for inflating cash payments? Which one is appropriate for showing higher cash payments? Let us see. A. Not accounting for cash sales completely. If you do not account for cash sales completely, will it result in inflating cash payments? No. If you suppress the sales, that if you don't record the cash sales completely, that is a method of suppressing cash receipts, not inflating cash payments. So we have seen in the fraud reporting chapter, defalcation of cash can happen in 2 ways. One is either inflating cash payments or suppressing cash payments. Suppressing cash receipts, sorry. So they are in the question they are asking, below they have given few techniques. Out of these techniques, which one will result in inflating the cash payment, showing higher cash payments, under which method it is possible? A option they are telling, not accounting for cash sales. If you do not account for cash sales completely, that will result in suppressing cash receipts, not inflating cash payments. So option A is wrong. B, making payments against purchase vouchers. You have made purchases and you are making payment against that vouchers where there is a defalcation of cash. There is no inflating. You have made purchases against that vouchers, you are making payment. So there is no case of making higher payments only. It is a correct payment only. So B is also wrong. C option. Making payments against inflated vouchers. You are making payment against vouchers, but amount in that voucher is inflated. For example, if you have purchased some 10,000 rupees, you are adding one more zero in the voucher and making it 1 lakh. You are inflating the amount in the voucher, then making a payment. Will it result in inflating cash payments? Definitely yes. Making payment against inflated vouchers, that will result in inflating the cash payments. Teaming and lading is also not a technique for inflating cash payments. It is a method for suppressing the cash receipts. So what is the correct option? C is the correct option. Then, as per section 143 subsection 12 of Companies Act 2013 and rule 13 of CAAR, Company Audit and Auditors Rules 2014, Mr. Lakshman Shell, that means under 143 subsection 12, auditor will be having some responsibilities. No, they have given 4 options. You have to pick up one correct option. So under 140 subsection 12, the auditor shall report the matter to audit committee constituted under section 177. See, that means a few companies are only required to constitute audit committee. If your company is covered in that criteria, then you are required to communicate to the audit committee. Or if audit committee is not required to be constituted, that means if that company is not covered under the criteria given in section 177, then audit committee is not required to be constituted. If audit committee is not required to be constituted, then you have to communicate the matter to board of directors or to the board in other cases. Here in other cases, in the sense where audit committee is not required to be constituted within such time and in such manner. Within such time, we already know within what time. Within 2 days of your knowledge you have to communicate. So under 143 subsection 12, what are your responsibilities? You have to communicate the matter to the audit committee if constituted under section 177. If audit committee is not required to be constituted, then communicate to the board of directors. Communicating to audit committee and the board of directors, no. Communicating to audit committee if constituted, or if not constituted, then communicate to the board of directors. Anyone is sufficient. And that too, if audit committee is there, communicate only to audit committee. If audit committee is not there, then only communicate to the board of directors. Okay, so A option is correct. B option, report the matter to audit committee constituted under section 177 within such time and in such manner. So they are just telling one thing, only communicate to audit committee. If there is no audit committee, board of directors also shall be communicated. No, they have not mentioned in that option. So B is incomplete, wrong. C, report the matter to audit committee constituted under section 177 and also to the board of directors. No, not and also, or. If audit committee is there, section 177, communicate to audit committee. If audit committee is not there, then communicate to the board of directors. Not both. Both are not required. So C option is also wrong. Then D option, report the matter to board within such time and in such manner. No, not only to the board. If audit committee is there, you have to communicate to audit committee. So which one is the correct option? A option is the correct option. 3.4. Owing to what limitations of an entity, there is some risk blank that some of the material misstatements of the financial statements will not be detected even though audit is properly planned and performed in accordance with the SS. So they are giving some blanks. We have to fill this sentence with correct options. So if you remember first chapter, nature, objective and scope of audit, inherent limitations we have seen. So owing to inherent limitations of audit, there is a unavoidable risk. There is a risk which we cannot avoid, that no matter how betterly you plan and perform the audit, some risk will, you cannot be able to identify each and every risk because of inherent limitations. So what are the correct options here? Due to inherent limitations and limitations of an audit, there is an unavoidable risk. We cannot avoid that risk of not detecting all the misstatements no matter whatever you do. So what is the correct option here? Inherent, unavoidable. A is the correct option. So all other options are wrong. Inherent, complete, management, unavoidable, regulatory control, all these are wrong options. What is the correct option to fill to complete this statement? Owing to inherent limitations of an audit, there is an unavoidable risk that some material misstatements on the financial statements will not be detected. Then 3.5. As an auditor, what conclusion Mr. Lakshman draw looking at the huge cash reserve of the company and corresponding bank loan? So I have told you that there is a huge cash balance of 7 crore rupees, right? In addition to that, they have taken 2 crores loan also. So what as an auditor you will do? What and all will be responsibilities? They have given 4 options. Let us see. A. Report this matter to central government under section 143 subsection 12 as there is a possibility of fraud. See, whenever there is a chance of fraud, you should not communicate. Whenever you have reason to believe, yes, fraud has happened, then you have to communicate to central government under 143 subsection 12. Just you are having a doubt, that matter only not required to be reported to central government. Just you are thinking there is a possibility of fraud. No, when there is a reason to believe, when you have some evidence, then communicate the matter to central government. Just you are thinking there is a possibility of fraud, are you required to communicate the matter to central government? Not required. A is not correct. Obtain sufficient and appropriate audit evidence of existence of fraud. Right. So obtain sufficient and appropriate audit evidence regarding existence of fraud. Yes, that you have to do. Since you are feeling a doubt here, there is a huge reserve, huge cash balance, but still the company has taken a loan of 2 crores. Since you are having a doubt, try to obtain sufficient and appropriate audit evidence. Is there a possibility of fraud there? That you have to do. Is this matter required to be reported under CARO? No, this matter, if the fraud has been found out, then you have to report that. Here just you are having possibility of fraud. No, not required to be reported. When the fraud is already noticed or reported, then you have to required to be reported under CARO. Now it is not required. There is nothing to report as it's a normal financial decision. It is not a normal financial decision. It is some suspicious transaction. It is some of the fraud risk factor. Right. Now you have to do procedures to obtain evidence whether fraud is there or not. It is not simple transaction and you can't ignore it. So what is the correct option? B is the correct option. You have to obtain sufficient and appropriate audit evidence of the existence of fraud. Okay. So let us see the answers. B, C, A. Let us see. Yes, 3.1 B, 3.2 C, 3.3 A. Good. A and B. Let us see them. A and B. Good. So these options are also correct.